And welcome to VSA Capital Tech and Transitional Energy Podcast on Thursday, April the 10th. It's a beautiful, beautiful sunny day. It's been a beautiful sunny week. But I dare say with Easter coming up, it'll all go wrong. Morning, Phil. How are you?
Hey, very good. Thank you, Andrew.
Goody, goody. Right, now, what a week it's been. Actually, I've got to start off with, I was actually in the city on Sunday. But not actually working. But it was an amazing Sunday because it was the London Landmark Half Marathon. My wife was running on behalf of raising money for the Royal Marsden. She's raised just shy of £3,000, just in case anybody wants to give a little donation to her to make it £3,000. Don't worry, I'll do it anyway. But watched her do 2 hours 38 half marathon. She's not a natural runner. She did really, really well. But it was just great fun running around the city, watching, and there was music playing, and everybody was having fun. And God, why isn't it like that every day, Phil?
Beautiful city, though, to be running around.
Instead, we have the madness, the craziness, and tariffs going up everywhere. And then the bond market goes and does a Liz Truss to Donald Trump and says, nope, you're not doing that anymore. And there we go. The end of democracy, isn't it, when the bond markets actually are controlling us? What do you think to that?
Well, they are. Well, it's just the nature of debt, isn't it, Andrew? Government debt and the scale of it.
Well, as I say, the bond markets actually control us.
Yep.
And that was why Trump changed his tack. No other reason. It was because the US bonds were crashing. And you can't afford as a country to have your bond market crash. And look, I think this whole, who knows where this trade war goes. As most people know, I've been talking about the end of Bretton Woods for ages. You know it damn well, Phil, because you hear it from me every day. And that's what we're seeing, the end of Bretton Woods, basically. And doesn't actually mean the end of global trade. What it means is that America is no longer going to be the global policeman. Actually, the dollar maybe is no longer the global currency. And I think one of the things that Trump forgets is that, it's all very well saying that, yeah, but we have these trade deficits or whatever. China, you've got rich off the back of us. But actually, America may have lost out on certain trade, but it's clearly benefited from the fact that the entire financial system has pretty much moved to New York and plays in dollars. And the amount of money that's been made in that is just incredible. Now, actually, funny enough, if that's all coming to an end, oh, God, London should have an opportunity of replacing New York. But our government will never do that, will it?
Can't but hope.
Mate, if you hope on that, you're going to be wasting a lot of your life, I think, hoping and hoping and hoping.
Indeed.
But there we go. And of course, I think you might want to talk about the effects on the Magnificent Seven with what the tariffs have been doing. But I would just remind you, Phil, in case you don't remember, with the Magnificent Seven, that actually 4 got killed, 2 ran off into the sunset, and only 1 stayed and married his lover.
I don't remember the film that well, Andrew. Well done you.
Well, it was made in 1960, so I'll forgive you for not remembering it, but what a great film it was.
Well, I don't think there'll be any killings going on. Look, it's it's going to be interesting because clearly they haven't recovered their losses yet in terms of share prices and in terms of tariffs. They're exposed to different parts of the manufacturing sector. So, for instance, those that are involved in cloud services are buying in lots of computer servers for all those lovely data centers for AI. And the computer servers, of course, are coming from Asia, from the Asian countries. So they're importing those. And then if you're Apple, of course, you've got manufacturing that's in Asia, and you're bringing kit into your phones into the US. So it's complicated, as they say, and it's going to be very interesting to see the quarterly results that are coming up and what they say. One about any potential exposure, but also in relation to capital expenditure plans and AI. I mean, maybe this is the opportunity for the Magnificent Seven, so a number of them, to step back and say, do you know what, actually, I know you've been commenting a lot on our expenditure for AI and capital expenditure. Maybe we've got to pare it back now because of, increased costs in the future with tariffs, depending on what's decided in 90 days' time, of course. on
But I
the
mean,
day.
Apple's a classic example, isn't it? I mean, all this tariff is going to do, really, is make your Apple iPhone incredibly expensive to US consumers.
Yep.
So what he's done really is just he's screwed the consumer, he's screwed Apple, and China will probably go, yeah, but it's fine. We just won't have iPhones in China. We'll just use Huawei for all of our huge consumer base. And I mean, the other one that he's absolutely going to kill, I tell you what, and again, we've talked a bit about this before, as you know, I'm a bit of an aviation um, buff guru, fascinates me. Put me anywhere near avgas and I'm off. But, Boeing is going to really suffer from this because the Chinese are just going to go, you know what, we don't want any more Boeings. We'll just go with Comac. They're building their own commercial aircraft, and right now it seems to be flying very well. And it is only a matter of time before the Chinese don't need Boeings anymore. Sadly, they probably won't want Airbuses either. They'll just fly their own aircraft. So, there's a lot of complexity to all of this, and the market's got very confused. Anyway, everybody has their own view on this, I'm sure.
Yeah.
But it's certainly making our life pretty interesting. It makes it very difficult to go and do things in the equity market. It's been hard enough as it is to do things in the equity market.
Yeah, that's right.
But
Yeah.
now they're making it even harder. And this is going to run and run all year. Who knows what 2025 is going to turn out like? You just don't have a clue right now. Now, I'll tell you what, talking of an SUV, you've got any other sort of big picture thoughts?
Well, the only other thing is that at least 90 days gives companies some time to work through their supply chains, but also their end sales to work out what the impact might be. I mean, the way we had it was nobody at any time whatsoever, and so the market's guessing. So hopefully, this breathing space will give that sort of opportunity for things to be priced correctly, based on. But even so,
yeah, they say a week is a long time in politics. The question is 3 months a long time in tariffs?
yeah.
I think things will actually get sorted out. I don't see a genuine trade war between China and the US taking place, but this clearly is a seismic shift in geopolitics, and you need to rethink about what the future is. It's the end of Bretton Woods. Balance your portfolio to suit that. But now we were talking about airports then and airplanes because
Yeah.
I love them. Mm-hmm. And so I just wanted to quickly, I know last week we talked a lot about Aurrigo and the launch of their cargo dolly. But this week they've announced actually an update on their partnership with Aviation Solutions, where Amsterdam Airport Schiphol has given it validation for their auto dolly and their auto sim. And they want to be able to, it's given it validation to 60 plus of their airports. I think the point about this, as I keep saying, and I'm sure we're going to get more news coming out of this company, the TAM is a really important word, isn't it?
Total available market.
Correct. And that is, this group has a huge TAM. So all they've got to do is somehow get themselves in a position where they can capitalize on it, and off they go to the races. Now, going back to tariffs and things, of course, a lot of airports in the US, currently they're being trialed at Cincinnati, but I think it'll get rolled out, their product will get rolled out across pretty every American airport. So to avoid tariffs or whatever, if we don't sort it out, they may have to find some sort of US manufacturing. The reality is they can have to find US manufacturing almost certainly anyway. You're not going to build it in the UK probably and then take it all the way to America. So, whether they do it themselves or do it under license, who knows? There's lots of people, someone like a Textron could do it. For instance, they already make airfield vehicles. But pretty exciting in the aviation space, I think. So just another little mention of them. It's become my favorite little company, hasn't it, Phil? Sorry about that. I'll try not to mention it every week. Well, maybe I will, just for fun. Anyway, what have you seen this week?
Well, let's look. We might as well stick with, just for the time being, quickly with aerospace and mention a client of ours, which is Equipmake. Ticker is Equip. 30 million market cap. The company has, it's a specialist in electric motor and inverter technology. Obviously it was announced recently that Caterpillar is investing £5 million into the company by way of a convertible. instrument. The company has a lot of IP, a lot of expertise, and there was a little announcement came out this morning that it's got a £0.4 million contract with Gilmore Aerospace, which is a private company developing a rocket in Australia. It's been around since 2012. It's aiming to launch into the small satellite market. But what's quite eye-catching about this one is it just highlights the nature of the technology that Equipmake's got, in that their electric motor has such a high performance to weight ratio. It's very high powered, but also it's been designed so it can withstand the environment of being within inside a rocket in terms of the acceleration rockets undergo, but also the pressure that undergoes. So a really good endorsement for their tech in the aerospace market. So we'll see how that one goes. That was Equipmake.
But just before you start, if you remember last week when we announced the Caterpillar deal, I did say, think about it, guys. There's likely to be a stream of announcements now because, of course, anybody who was thinking of doing a contract with Equipmake over the last 3 to 6 months, knowing they were slightly stressed because we were quite open about it, would have just held off on doing it. Now you've got blooming great Caterpillar in there, so you know the company's safe. Well, the probability is they've got 6 months of orders to catch up with. So there could be lots and lots of good news coming out here. Funny enough, the market hasn't quite clicked onto that, I don't think. And therefore, there is quite an interesting opportunity. Just saying.
Yeah, there we are. They're a client of ours. We put out an announcement last week, following Caterpillar, that we will in due course be putting out up-to-date forecasts on Equipmake. So there we are. So that was that specialised tech. On a sort of wider front, TT Electronics. The ticker is TTG. Market cap now, given where the shares are at, is £139 million. The share price is 74p, and I realize I note that is that TT Electronics is an electronics company, makes components for industrials markets, aerospace. I don't know if they're still in automotive, but specialized electronics components. I think maybe power electronics. It's got international operations, international markets. Anyway, the company had a bid approach, Andrew. Remember this? This was Volex. Yeah, Volex back in November last year, over November, December. Finalised the last offer, I think, in was 135.5p per share. TT rejected that bid. The share's now at 74p today. It's announced full year results. The CEO is stepping down. New FD is being appointed, and they saw their revenues drop by 13% to £520 million. Operating margins at 7.1%. I used to cover this company over a decade ago, and it was still making single-digit operating margins and promising to grow them. Anyway, losses, profit before tax down from 37 million to 27 million, and its outlook statement, it's saying that it expects profits ahead to be, I think, in a range of 32 million to 40 million. So a lot going on there at TT Electronics, not all necessarily good. So that was that. And sticking with electronics, Gooch Housego, GHH is a ticker, 100 million market cap. They had an interim trading update. It's quite a complex company, Gooch Housego, just in terms of its end markets. This is specialist photonics technologies. So they go into a whole range of areas where specialist optics are needed, particularly into defense, industrial lasers, and in the semiconductor industry, which uses lasers for lithography technologies. So it's all about optical technologies. And their interim trading update, they said that they'd seen revenue for the 6 months ending March rose to 70.8 million from 63.6 million, and that they'd seen strong order book momentum. Orders up from just under 105 million to 121.5 million, trading in line with management expectations. So the shares have been off. I've not got a chart in front of me, but I think they're down about 18% year to date. But that looks like good news from Gooch Housego.
Very good.
There we are. Now, here's another one. Now, this company has had difficulties in the past. It's Calnex Solutions. Ticker is CLX, and it's telecoms test equipment. And I know that Spirent were one of the who are a big telecom test equipment house were a client of theirs, but it's telecommunications equipment, so it's into the telecoms network testing equipment, but also the cloud markets in testing data communications within data centers, because data has to be transmitted to data centers and they have to test the speeds, etc. Anyway, the company had a previous profits warning last year, quite a significant one, where it's seeing a downturn in telco capital equipment spend. And remember, its customers are BT, NTT, Ericsson, Nokia, all the big players in telecommunications. So it had a bad profits warning. I think it was back in May last year, and they've come out with a statement this week, and they've said, so I think this is a trading update. Yeah, it's for the full year ending March 25, and they said that they've returned to growth in line with market expectations and returning to profit, and they've been growing their margins as well. So very much recovery story there. And it seems to be quite widely held by institutions as well, Andrew. So there's a broad supportive fund, well, I say supportive, but there's a broad fund manager base in there. So that was Calnex. Intercede, and here's a company we talked about before. IGP's a ticker, 83 million market cap, and it is in cybersecurity. And their software it specialises in digital access. So this is all about users accessing computer systems. And their software helps protecting access in terms of passport security, one-time passports, identity, different identity techniques, and it's widely used by government bodies as well as commerce, and particularly in the US as well, where it made a lot of progress. Anyway, so they've announced that this is a trading update. So they've said trading's showing strong momentum for the year compared with market forecasts. What's also interesting in this is that they benefited last year from a very large one-off order of £6.3 million. So last year's revenue was 20 million. They're now expecting 17.7 million. So on the face of it, it's lower, but last year it had this very large one-off order in there. And they said the combination of strong revenues, high operational gearing means that it's resulted in improved forecast profitability. So that looks quite positive. And Intercede, 83 million market cap, has 18.7 million in cash on the balance sheet. So in a good position.
Very good.
There we are. That's Intercede. A final one. There hasn't been a lot of news on the company front this week. I mean, it's a quieter period. Was Eqtec, Andrew?
Yeah, no, and they're quite a good announcement this morning. I mean, the thing about Eqtec is it's actually performing really rather well now this year. Annoyingly, it was my stock last year as my stock of the year and didn't perform well. I was just a year ahead of my time, wasn't I?
I think you were. The ticker's EQT. It's a small cap. This one, 3 million market cap. It does. This is for I think it's power to. So it's waste to biofuels technologies that Equitec had, and they announced today a subscription of £1.5 million from a JV partner. It looks to be investing in the company.
Yeah, I think there's. It is. It's now starting to perk up quite nicely. David Palumbo, the CEO, has been doing a great job getting them, frankly, out of the merd, as they would say in French. Well done him. There's more work to be done, but it's interesting. Also, I'd actually just drop in again one of my sort of favourite bugbears, IP Group. I noticed that Greg Smith, the CEO, bought 120,000 shares. The share price is so low; it's not a huge amount of money, and he actually still only owns about 0.1% of the company or so. I think if you're I'm slightly biased because as a CEO, I've always owned in every company I've run, 3 of them significant stakes, but that's just the way I like to be. But I suppose it all helps. As Tesco would say, they had their results. So nothing to do with this podcast, but every little helps. Although Tesco was warning, obviously, of a bit of a price war coming up, and the market got quite nervous. It's down 5.8% today, Tesco. But but that's good for the consumer. We love a little bit of a food retailing price war. Our food gets cheaper.
Well, indeed, and they've had intense competition from Aldi and Lidl over the last few years, and yet there they are. They've still got substantial market share.
And talking of prices coming down, actually, I don't know if you noticed, but I mean, Tesla, of course, is seeing its second-hand car prices absolutely fall out of bed. And you may have noticed that Volkswagen yesterday actually said that their market share for EVs in Europe has risen dramatically, mainly because Tesla's has completely collapsed, but also slightly less imports coming in from China in March because of various tariffs and things. Anyway, there we go. That's enough. Very good. We'll be actually we probably maybe back next week. We'll just see. It's Monday, Thursday next week. We may feel we're so entrenched into Easter we don't want to do it. We'll just see. We'll surprise everyone. Thanks, Phil.
We will. Take care, Andrew. Cheers.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.